Social distancing measures have been extended. What that means to your financial situation. All that and more today on Your Wealth Health. Hello and welcome. I'm Erik Brenner, President and CEO of Hilltop Wealth Solutions. It's great to have you here today for another episode of Your Wealth Health. If you're watching us on Facebook, if you could hit the share button, that would be helpful, as well as you can follow us online at yourwealthhealth.com or also listen to us on a podcast. We are continuing to practice social distancing. We continue, and obviously it's been extended for the month of April. And so we will continue to do so until they tell us it's safe to come back as a team. So I'm here in our main office in Mishawaka, Indiana. I have a cameraman here, and I have Matt Aurenz, our Director of Wealth Management and Private Wealth Advisor, joining me from his home in Valparaiso. Matt, welcome to the show.
Thanks for having me, Erik. Pleasure to be here.
You're welcome. So it continues to be a volatile market, and it continues to be a changing environment almost hourly. We talk about this a lot on our team, that things are changing each and every day and each and every hour, aren't they?
They sure are. They sure are. Every day there's new news coming out, and we have to figure out how to navigate that water.
So let's just hit a couple of the highlights. Most people probably have heard what's been going on and what came from the CARES Act, but we really wanted to hit some of the highlights of this. So let's talk about that, Matt.
Sure. So I think the big things that we were planning and expecting have come through. The primary things I think most people are going to appreciate right now is going to be the checks for individuals. So in individuals, looking at about $1,200 per person. And then if you have a dependent that's qualified under the age of 17, you'll get an extra $500. So married couple with 2 kids, looking at $2,400 for the parents, another $1,000 for the kids. That's going to be some immediate help and immediate relief for individual families. And then you're looking at big corporations, small businesses getting about $500 billion and $377 billion respectively. State and local governments with about $340 billion, and then the public health sector with another $154 billion. So the goal with all of this is a huge package deal, but is really to just help stabilize what's going on in the economy for corporations, families, and governments. So we're excited about how this is going to help out the economy and individuals.
Yeah, and it really was needed.
I think so. You're always going to have agreements or disagreements on should or should we not as a government step in. But again, like we talked about last week, we're not really concerned about whether or not it should have happened. We're more concerned about it did happen, and what are we going to do to help influence our financial lives and clients' lives financially.
Yeah, that's a good point. So we want to bring this back to investing and emotion and making sure people are making the right decisions when it comes to their investment strategy and philosophy. And so let's look at the graphics here on the screen and talk those through.
Yeah, so this is a really great slide that just kind of goes over the last 20 years. And this graphic really depicts if you have a traditional balanced portfolio. And it kind of goes through some of the experience that investors have while you're looking at what the market's doing. And I think most people, when they generally hear the market, they'll either think of the Dow Jones or they'll think of the S&P 500. And a lot of times when the Dow is or the S&P is down, people obviously don't want to go down as far. But they're not looking at the fact that, hey, I lost money, but I didn't lose as much. So my portfolio is actually working for me. And on the upside, when the market goes up, for example, 2003 to 2007, it's up 83% in that period, and they're up 73. They're thinking, well, I didn't go up as much. And so you go through this emotional roller coaster of, well, I lost money, but I didn't make as much money. I lost money. I didn't make as much. But math works in a peculiar way, and so volatility and the ups and downs. If you don't capture as much of the down, you don't have to capture as much of the up to still be beating the overall average and beating the overall indexes. And that's kind of what this shows, is just the growth of the $100,000 over the last 20 years and where it would be. So diversification wins even when you feel like you're losing. And that's an encouraging thing for us. And that's, again, something that we want to focus on. And so our goal is how do you control the risk in your portfolio? At the same time, how do you control your emotions?
Yeah, and one of the things I see on the graphics that really stands out to me is the period between that '09 through 2019. And you look at the S&P 500 cumulative of 351%, compared to that diversified portfolio of 191%. So that's a 160% difference on a cumulative basis. And as you indicated, a lot of folks would feel like they're way behind the stock market, right? That whole thing that we have there didn't make as much, but ultimately that's not the case.
That's exactly right. That's exactly right. And so you really have to, again, you're not going to take on as much risk as the market traditionally. And so you can't use that as the only comparison of how you're comparing your portfolio performance.
Yeah. So as we transition to the CARES Act, and we talked about this, but if taking a look at the screen, a couple things we wanted to just briefly talk about was the relief to small businesses. And we know that there is the Payroll Protection Act within the CARES Act that has been rolled out, and businesses are starting to get money. Because this act was put together really in a few days versus many months or even years, there's going to be hiccups along the way, and we certainly have seen those.
We've definitely seen those. We've already seen the early stages of many business owners and clients just say, with a bit of confusion, how is this working? What's the application process? We've seen banks already express overwhelming feeling of frustration because they're overloaded. But over the last few days, we're already seeing that kind of calm down. We're seeing that process beginning to work. We're seeing a lot of relief that sounds like it's already going to be on the way within a week or two for many business owners. So that's an encouraging sight for us.
Yeah, it is. And, we've heard from really top leaders in the banking industry as well as the Treasury that they're working on this 24 hours a day, 7 days a week to really get relief to those that are in need.
Definitely. And I don't envy their position at this point. They're putting in a lot of hours. They're sacrificing a lot of family time and personal time to get this done for the business owners. So we just got to come from it as an appreciative standpoint.
Yeah. The other thing that we have been asked is, will there be other relief acts and other things that the government will do? And, we don't know this for sure. However, we do feel as though there's going to be some additional relief needed.
Right. We're already calling this really a relief bill. We're not really calling this the stimulus bill. How much more we don't really know, and I think the government is going to weigh out the costs of getting a handle around data on the coronavirus and COVID-19, and what does that trending look like, and what more stimulus is actually needed before they just pull the trigger and throw something out there. But we've already heard another $2 trillion in an infrastructure bill as a potential from President Trump. So that would be an interesting one. That could help the economy greatly. But again, at this point, we don't know. But our initial reaction, our initial thoughts are that most likely there will be some additional stimulus along the way.
Yeah, great. Well, thanks, Matt. At Hilltop Wealth Solutions, we've stepped up our education and really helping people think about this in this really challenging time. So we have a couple resources available to all of you. If you go to our website, we have a Market Volatility Resource Center. On that center or on the site, you can actually sign up for a weekly webinar that we're having just to keep folks updated as kind of where we're at in the market and some strategies along the way. As well as there's an opportunity for you to schedule a 30-minute call with one of our wealth advisors if you have questions or need a second opinion. When we return on Your Wealth Health, we're going to talk about a couple really important topics. Unfortunately, in this time of challenge, there will be products or solutions out there that you may be asked to look at or consider to help maybe provide some guarantees, and they may not be right for you. So we're going to talk about what it means to be a fiduciary financial advisor, and is your advisor a fiduciary, and then specific financial strategies that will help your situation in the long term.
We get a lot of questions about down payment, and it's going to be applicant specific as well as vehicle specific. But the best part is right now, the down payments are as low as I can remember them being, because we have 2 or 3 additional promotions going on right now that different people qualify for. So it's crazy to see. I'm looking at a car going, that's the down payment? There's no way. I do the math again. I'm right. You know, it's just fantastic how low they've been.
Welcome back to Your Wealth Health, and thanks for joining us today. I'm Erik Brenner, and it's good to have you join us in another session on talking about your wealth health. If you're joining us on Facebook, please hit the share button to share the information we're talking about, or if you're watching us online, thank you for doing so. And I'm joined by Matt Aurenz today. Matt's joining me from his home as we are practicing the social distancing standards and recommendation in our entire firm. So, Matt, welcome back.
Thanks for having me.
Sure. So one of the things we think is important in a financial situation and getting financial advice is having an advisor that has a fiduciary responsibility. And that is a responsibility to always act in the best interest of the client. And what we know of, because we have this experience of having down markets, is that many people will be approached by products that may not be in their best interest.
I think it's a great point, Erik. I think these are opportunities for people to really begin to understand the relationship that they have with their advisor. And I think you kind of alluded to that. You don't want to get sold something based on fear or based on concern. And this is really a time where we begin to realize, when you care about your clients and that long-term relationship really matters. And the only way you can have a long-term relationship with somebody is if you're acting in their best interest at all times.
Yeah, great point. So let's take a look at the graphics. So what is a fiduciary advisor and what do they provide for you? First off, they obviously care about you. So it's about you and your financial decisions and your family's financial well-being. It's experience. So do they have experience? I think it's important to have someone that has experience, especially have they seen other market downturns?
Exactly. What's the longevity of the person that you're working with? That's an important thing. I'm the youngest person in our firm, and I'm here with 19 years. So that just tells you and alludes to, hey, we've got well over 100 years of experience on this team, and something we're exceptionally proud of.
Yeah. Fee transparency. This is a big one. What are you paying? Obviously, folks need to make a living. What are you paying your advisor? And if it becomes difficult to explain, it may or may not be in your best interest.
That's a great point. If you can't clearly explain with simplicity what you're paying and what your costs are, probably shouldn't be in that situation.
And I think about what can you control in your financial situation, in your investment strategy. And one of the things you can control is the cost, to make sure that you're not paying too much. Personalized service, obviously everyone wants that personalized service. They want to make sure that, is this accustomed to you? Because every situation is different. Just because your neighbor's specific financial advice and they go one direction doesn't mean it's correct for you. Holistic approach. So they need to have a holistic approach, not just talking about your investment return. They really need to look at your taxes, your retirement strategy, your savings strategy, even your estate plan. Holistic approach is really important.
I think holistic is one of the paramount things that you have to go with. Even just our conversations over the last few weeks of seeing a huge amount of people being laid off. If you're only dealing with investments, you're not asking questions like, what does that do for your medical insurance? What does that do for your life insurance and your disability insurance? How is your family being protected in this time of you no longer being able to work? All of those things influence other goals. And if you're not well prepared to understand all those components as an advisor, you're actually doing an injustice to the client.
Yeah. Regulatory knowledge. So need to understand our environments as they stand today. And, there is a difference, as we talk about, from a fiduciary to being suitable. So there are different ways that advisors can work with a client, and we know that clients have choice on how they work with folks. Proactive communication. So we've talked about it here on the show, doing updated webinars, reaching out to clients, making sure that we're really tied into their goals and needs and helping them make really good financial decisions, not decisions based on emotion.
Right. I think all of those are a great point. Again, if you can't clearly explain all of these and you're not working with somebody who can help you in all of these capacities, I would begin to just ask the questions to make sure that you are getting the best advice possible. That is not just suitable advice, but it's advice that's in your best interest.
Yeah, it's a great point. And then succession plan. And you may say, what is that? What is a succession plan? But what you want to think about is, what is the plan in place in case something happens to your advisor? What if they get ill? What if they unfortunately come down with COVID-19? What if they become disabled? And of course, what if they retire? And what if they unfortunately pass away? What is the succession plan of the advisor and the firm? How are you going to be taken care of? Many of our relationships have been 25 years plus, and we want to make sure that there is a succession plan in place where folks are going to continue to be taken care of no matter what happens with the advisor and the advisor relationship. So let's talk about those questions. We have some references on Your Wealth Health. One of them is about 10 questions to ask or ask your financial advisor. I would encourage you to go to the website, yourwealthhealth.com, and pull that down. Use that as a template when you're either interviewing an advisor or whether you want to have a discussion with your current advisor, and get the answer to those questions that are pretty important. As you think about a relationship, certainly you have to mesh with the relationship and have a good understanding of, or feel like they have a good understanding of your goals. And the holistic approach. We talked about that, but we can't stress how important that is. There's been statistics out there that say 95% plus of financial advisors never look at a tax return. When you think about that, taxes are the heart of many of our clients' situation, and they can make moves and shifts that would affect their taxes, and it can cost them thousands of dollars, can't it, Matt?
It really can. That's something that you have to pay close attention to.
Yeah. Well, thanks, Matt, for helping us just understand, the relationships and how you go about choosing a relationship. And again, just know that you probably will get solicitations about some products, and just want to make sure that it is in the best interest of you, not in the best interest of earning a commission. When we return on Your Wealth Health, we're going to dive into some more strategies about the CARES Act. And we also want to remind you, as far as resources, that we do have resources. We have a weekly webinar that you can join in, as well as a free 30 introductory call.
Here at Hayes, we provide premium cleaning services for Northern Indiana and throughout Southwest Michigan. That includes homes and businesses. We do the dirty work for you so you won't have to. This allows you to concentrate on what's more important to you, like family. We offer weekly, bi-weekly, once a month, one-time cleanings, special events, whatever that may be, Hayes is here for you. We provide top-of-the-line cleaning supplies so you know you're getting the best. To learn more, contact us or right here on Facebook to try K's Way.
Welcome back to Your Wealth Health. I'm Erik Brenner, practicing social distancing here in our office in Mishawaka, along with my camera person. And I have Matt Aurenz, which is at his home, joining us via electronically. Matt, thanks for joining us again. So let's talk about the CARES Act. A little bit more detail. We've been talking about this over the last couple of weeks. And we had a large retirement planning act called the Secure Act that we talked about on the show that was effective January 1st. And then all of a sudden, we've now are into this whirlwind, COVID-19, a global pandemic, and now the CARES Act has come out and how that coordinates.
Yeah, it's a big deal. There's a lot involved in there, particularly when it comes to the required distribution for many people, having to pull money out of their IRAs or 401ks. That pre-tax money that they thought was going to be added to their tax bill this year has been waived. So the required distribution was moved from 70.5 to 72. And now the federal government is allowing people to waive that required distribution for 2020, whether it's on your IRA or 401k retirement plan and or an inherited retirement plan as well.
Yeah, so this is a big deal, I think, for a lot of folks, because there are a lot of folks that are fortunate in the sense they don't need the required distribution to live, but yet they have to take it, and they have to take it out and either reinvest it or they use it, take kids on vacation, whatever the case may be. But now may be the possibility of taking that required distribution and converting it to a Roth. Why would you convert it to a Roth? Well, after it's in the Roth IRA, as long as the Roth's been established for 5 years, it's tax-free. You can take it out tax-free. And we often say Roths are flexibility. Doesn't matter if you take $10,000, $20,000, or $100,000 out of a Roth IRA, it does not affect your taxes. You can also have a 60-day look-back window. So I know we've started to do this with clients. Starting to look at situations that have taken a required minimum distribution for 2020, and now they're considering, should I put it back into either my IRA or should I look at converting that to Roth? Also important to note about inherited IRAs, Matt.
Right, inherited IRAs are a big one. If you don't need to take out that required distribution, and many times people don't because they're younger, 30, 40, 50 years old, they just don't need the money. They're using it for retirement savings. This allows you to defer that, not have to pay the unnecessary tax. So that's a big deal for a lot of people.
So ultimately what you want to make sure of, and as we talked about in our prior segment, holistic planning and taxes. So it's not just about the IRA, it's about holistic planning. What's it mean tax-wise? Really important. Second thing is above the line deduction for charity, $300. Doesn't sound like a lot, but it's there. And if collectively we can all come together and make a charitable contribution, you can take above the line deduction of $300.
Exactly. So we're telling people, make sure you save your receipts for those little things that you give money to, that in the past you thought, well, I couldn't deduct it anyway because I used the standard deduction. This is an opportunity to get an above the line deduction. So you want to make sure you save those receipts.
Yeah, and I've already had some clients take advantage of that, helping local charities that are really in need. So we would encourage everyone, if you can, take advantage of that. And maybe you'll be receiving your check from the CARES Act. And if you don't need it all, and you're fortunate enough that you don't need it for immediate living expenses, you take some of that and give it back to charity. And then contributions. So there's been a couple changes here. One of the things I think that's important to point out is prior to this, there was, and there still is, a qualified charitable distribution. And what that means is if you are over 70 and a half, you can actually give money to a charity, and it's up to $100,000 annually, and it comes right off the top. It is the best way, or one of the best ways, to give money to charity. We have a lot of clients doing this. And you can give to multiple charities. So this is just a still overlooked strategy that people just need to be aware of and consider. Don't you think, Matt?
I do. And the key point there is that money, that qualified charitable contribution, has to come from a qualified plan, such as an IRA or a 401k plan, 403b plan. So it allows you to gift money to charity, and it allows you to avoid paying any income tax on that distribution when given directly to them. That's a huge, huge benefit, and that is still in place. So kudos to the government for that.
Yeah, and in times like this, what we have seen in the past is people that are fortunate enough and have done a good job of planning and saving, and the charitable contributions increase. And last downturn in the market, 08, 09, we didn't have this in place. So this is a great point.
Definitely. I think it's a great one to use. And so I think, again, it goes back to how are your taxes influencing your retirement and your estate planning and your cash flow planning. And you have to look at that holistically.
Yeah. Well, hey, Matt, thanks for joining me today. I wanted to bring you or show you our website. So we have several things on our website that are there for availability. One of them is the market update or market resource center. So on the website, if you visit now, you'll see you can register for our webinar, which happens every Friday at 3 o'clock Eastern. You can join us also on Facebook Live. We also have other resources that we're consistently updating, and so we encourage you to visit the website. Lastly, I want to point out a schedule a call. We have a 30-minute introductory call where you can schedule with one of our wealth managers. They will get to know your situation, understand your needs and goals, and determine if there's anywhere that we can assist. And I just want to remind everyone to follow us on Facebook, and we're also on LinkedIn. And thank you for watching us on Fox Michiana. For Matt Aurenz, I'm Erik Brenner, and we'll see you next time.